In the last week or two, I've been getting a lot of requests for a valuation of Ulta Beauty and my thoughts on Ulta Beauty stock, which kind of surprised me. I don't very much get requests to do videos on cosmetics companies, but I've been getting more and more recently. Some requesting Ulta Beauty, others Estee Lauder, and others for e.l.f. So I'll be doing some of those. I'll be going over some of these stocks over these next coming days and weeks because I've gotten so many requests from viewers like you. So please continue making those requests in the comments section below. I do get around to these videos. I have a list that I keep with all of your requests. In this video specifically, I'll do a discounted cash flow valuation of Ulta Beauty and let you know what I think is a fair price to pay for this cosmetics business. All right, so let's jump in. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So my discounted cash flow valuations have three sections. Section in green, which talks about and forecasts free cash flows. A section in blue, which evaluates the discount rate, the cost of capital. And then the section in red, which breaks down and brings together everything to come to the conclusion of the price per share, the intrinsic value per share, the fair price per share, I believe, for Ulta Beauty stock according to my calculations. So let's start with the section in green, and the section highlighted or shaded in green here is the section where I receive and I input the free cash flows estimated by Wall Street analysts that are following Ulta Beauty, what they think the free cash flow will be between 2024 and 2029. So according to Wall Street, they believe that Ulta's cash flow will rise from $1 billion in 2024 up to $1.5 billion in 2029. But they also forecast that between 2024 and 2026, the free cash flows will decline before they rise again. They expect the free cash flows to fall down to $940 million before bouncing back up to $1.5 billion in 2029. From that point onward, from 2029 to 2034, I'm forecasting that Ulta's free cash flow will grow at a 7.4% rate compounded annually. And so the free cash flow will rise from $1.5 billion in 2029 to $2.129 billion in 2034. Those are my estimates. And then from 2035 to infinity, I forecast that Ulta's free cash flow will rise at a 5% rate of increase to infinity. Ultimately, these corporations, they could theoretically last into eternity, survive into eternity, infinity, whatever your preferred word is, for the very, very long term. And so you can forecast those free cash flows out to infinity using the terminal value calculation. And the formula for this is the free cash flow expected 1 year ahead divided by the weighted average cost of capital minus the growth rate. And so I've done that here for Ulta, and that terminal value I've calculated is $35 billion. So now that we've forecasted all the free cash flows out to infinity, we need to know the present value of all of those cash flows, because money 5 years from now is not worth the same to us as money in our pocket today, right? All of you watching, if you're an investor, I hope you'll answer this question, that you would prefer to have $100 in your pocket today instead of $100 in your pocket 5 years from now. Because if you have $100 in your pocket today, you can use that money. At the very least, you can put that $100 in a savings account that gets you 4, maybe 5%. And so in 5 years, you will have earned 5% every year, and you'll have $125 instead of just $100. So just for that reason alone, you should prefer $100 in your pocket today versus 5 years from now. But that's the underlying reason why cash flows in the future need to be discounted. We need to lower the value, and we use a discount rate to do that. And the discount rate I've used for Ulta is 11.38%. I've given them a cost of debt of 7%, a capital asset pricing model I've calculated of 12.5%. Given that they have a beta of 1.33, I've used a risk-free rate of 4.5% and a market risk premium of 6%. Since they have 19 billion market cap and 2 billion in total debt, I've given them a target capital structure of 20% debt and 80% equity. So when I bring all of that together, I get a weighted average cost of capital of 11.38%. Remember, a company can finance itself with debt and equity, right? Two primary sources. I mostly exclude the mezzanine, the preferred stock, which goes in between the debt and equity, but that's mostly rarer. And so I don't go into those details for simplification's sake. But for those of you that are interested, preferred stock is considered something like in between a bond and equity. It has characteristics of both. You don't see that very often nowadays for companies to have that included in their capital structure, but sometimes in rare cases, you will see that. All right, so a value of operations, which we received from the green section, is our starting point for the red section for valuation. We get 20 billion in the value of operations. We need to add the cash balance and subtract the debt to get to the value of equity of 18 billion. But we want to know the price per share, so we divide by the number of shares outstanding, which gives us an intrinsic value per share for Ulta Beauty of $383, compared with the current market price of $374. Now, I usually like to have a margin of safety in my calculations, and so when the intrinsic value is so close to the current market price, I don't say it's undervalued, I say it's fairly valued, right? I would need the price to be like, $400 or above before I can say it's undervalued. Up until that point, I would just say it's a fairly valued, maybe looks like it's slightly undervalued. But at this price, I would say it's a fair price for Ulta Beauty. So just for transparency's sake, these numbers you see highlighted in blue, I got from Yahoo Finance. The numbers shaded in green, I got from ticker.com. The rest of these numbers and inputs are calculations, interpretations from my own analysis, bringing together several sources to come to these conclusions and estimates. So in other words, what's a fair price to pay for Ulta Beauty stock? Anything below $383 per share, or at $383 per share, I would say is a fair price to pay for Ulta Beauty stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.